All right, what's up, guys? So I'm just gonna put out another video today. It's gonna be might be a bit of a longer one, but I just want to talk to you guys about something that's kind of been a big thing in the market recently, and those are SPACs. Right? You've probably heard me say that a couple times. SPAC. I had somebody ask me today about GHIV, Gore's Holdings. They're merging with United Wholesale Mortgage. They just merged with them like a couple hours ago, and they asked me if it was a good buy, and I said no. And I'm going to tell you the reason why I said no. And I think it's very important that you guys understand why I said no. So first off, what is a SPAC? Okay, so a SPAC, it's a special purpose acquisition company, and it's a blank check company that basically just uh, um, uses money. It will build up money to bring a company that is not publicly listed yet onto the market. It's really a lot easier than doing like a traditional IPO. With a traditional IPO, there's a lot of paperwork involved. There's a lot of like private trading that goes on. So like sometimes you'll see like Airbnb, right? They opened at like $180 a share, and it was at like 62 pre IPO trading. So you can see like it allows like those private investors to make a lot of money, whereas like us retail investors we kind of get shafted. So like with SPACs, it allows like us retail investors to get on the ground floor, and the SPACs usually open around $10 a share, which is great. And like I said, like Airbnb, they were filing for an IPO for like 5 years. I think with the SPAC, it takes like 6 months maybe to do a full merge. So it's a lot different. But yeah, so GHIV, they're going through a ticker change today. I think their ticker is going to be UWM, I think is what it's going to be tomorrow. But I just want you guys to say this with me, all right? A ticker change is not a catalyst, okay? A ticker change is not a catalyst. And I just want to bring up some previous ticker changes just to illustrate the point. And while there may be some on this list that do well after ticker change, I would say 80% to 85% do not do well. Okay, and I'm going to bring up all the ones that I've found. It's going to take a little bit of time, but I just want to drill it into your guys' head. So, XL Fleet was one, and they merged December 22nd. That is right here. Okay, so yes, they pumped massively afterwards. This is a good company. They make there's a lot of hype around this company. They make electric 18 wheelers and semis, and this is a really good one. But as you can see, they pumped and then they just sold off, and they're right back to where they were. So if you do have something like this, I would suggest you sell on a big green candle like this. So this is an example of a pump after a ticker change. Okay, Goev, on the other hand, they merged December 22nd, the same day, and look at this. They pumped and they just started selling off rapidly. Okay, like you can catch this pump, but don't hold it. Don't hold through ticker changes. This is why you can maybe get lucky on the day, but it gaps up, maybe it moves up a little bit, and then it just plummets. Another one is Velodyne LiDAR, VLDR. They merged on September 30th. So we can go over here and you can see that right here, bam, big price drop, big price drop, big price drop. This was terrible. Another one, Hyliion, another really bad one. They merged on the 29th of September. Right here, bam, price drops all the way down here. That is legit more than a 50% dump. That's terrible. Okay. Romeo Power, RMO, they merged on the 30th of December, and that is right here. Bam, price drop. Terrible. Clover, this is one that I do like long term. And keep in mind, these are companies that I do like long term, some of them at least. But you do not hold through a ticker change. They merged on the 6th of January. Okay, yeah, they had a couple good days. Bam, price drop. Okay, GNOG, Golden Nugget Casinos, online gaming. They merged on the 30th of December. Okay, that's right here. Bam, price drop. Terrible. Skills, they merged on the 17th. Right here, pump, and then a subsequent drop. And they have continued. This is a good company. Ark's been buying a lot of this. I do like this company. It actually does look ready for a big breakout soon. But again, this is you maybe get this pump, you ride it out, bam, it's terrible. But as you can see, these companies, the ratio of them pumping it to not pumping after a ticker change is not the best. DraftKings, they merged back in April, right here, and bam, price drop. They did continue upwards. But I know this is a 20% drop, and I don't really like that. I would rather buy at the ground floor after the price merge or after the stock merge. Utz Brands, they merged on August 31st. Right here, price drop, bad. TTCF, Tattooed Chef, another one that I like long term. I like this one a lot long term, but October 15th, we can see price drop, not good. BFI, BurgerFi, okay, they merged on December 17th. Right here, price drop, bad. HTOO, fuel cell, not fuel cell, sorry, Fusion Fuel. Oh, my bad. Um, this one, I don't know. Sometimes the SPACs don't like doesn't show pre-merger, but this is where it was post or pre ticker change, and it just this is a this is not good. You know, this is a 9% dump after a almost 40% dump. That's terrible. Um, Clover, CLVR, or Clever, sorry, Clever Leaves. They merged on the 18th. Another one that didn't doesn't show pre merger, but another one that has just been pulling back recently. Laser, Luminar Tech. These guys merged on the 3rd of December. This was one that did run up very nicely. If you had caught this, this would have been really good. Um, But yeah, that's one that's done really good. Open Door. This one has actually been doing insanely well. Ark's been buying a lot of this one. I like this one a lot. I think it's going to be very disruptive in the housing market. They merged December 21st. Again, another good company. Bam, price drop. Okay, even with the good companies, there's a drop in price usually. Porch Group. They merged on the 23rd of December. Right here. Pump. That was pretty good. Dump. So if you do play these, you hold for maybe a day or two. Make sure you set those stop losses. Arco, they merged on December 23rd. Right here, price drop all the way down. It has not stopped. Um, QS, this is a special one. Okay, I want to talk about this one really quickly. Okay, they merged on the 27th and they had a meteoric run all the way up to 132. There is a reason for this. They make or they don't make, but they are backed by Bill Gates, okay? And their product they are planning on making is revolutionary in the EV industry. There is a lot of hype around this stock. That is the only reason why it pumped. Okay, as we can see, it's almost back to those levels. Um, Free Whole Earth Brands merged on June 25th. Um, okay, go back all the way over here. Terrible. They lost almost 50% of their Value. That was really bad. I was actually caught in that one. That was when I didn't know ticker changes were bad. EQOS, Diginex. This has been on tear recently. They're talking about crypto stuff. It actually looks good for another pump. But they merged on the 1st of October. Right here. Bam. Another 50% loss in value. Meal Plan, MPLN. October 9th was the merger. We can see, where is it, right here? Bam, price dropping right here. These couple days just kept falling down and down. Curiosity Stream. I played this one a while back. It did pretty well for me, but on October 15th, the day it merged, it fell a lot. It fell from 1145 all the way down to 860. That's 20%. That's pretty bad. SFT Shift Tech, October 15th. Here, list was also really bad. They also got a short seller report right here, which was terrible. But yeah, another one that just fell after ticker change. Ride, DPHC, Lordstown Motors. DPHC was the ticker before the change on October 26th. Right here, another one that just fell all the way down. This one is actually, I like this one long term, and it doesn't look bad. Now that I'm looking at the chart, it could push up. I'll keep this one on watch, so I would keep that one on watch. EOS. They merged on November 17th. My bad. Where is that? Right here. And this is another one that did pump after merger. Really, really good run. Um, DM Desktop Metals. They merged on December 10th. Uh, right here. Bad dump, really bad dump. Opened at, what is this? They opened at 24.50 and they got all the way down to 1661. That's really bad. RVPH Reviva, they merged on December 15th, right here. And this one didn't really do anything. It moved down. It's just been kind of stationary. It doesn't look good. I don't like that one at all. LOAK, Danmer Scientific. Oh, that was pre-merger. DNMR. Sorry, DNMR merged on the 30th of December, right here. Yes, they did gap up, but they moved down. That's really bad. ASLE. This one was weird. This one pumped a lot on the merger. On December 23rd, they pumped like 100%, like 50%, something like that, something crazy. They did kind of hold, and they've been moving up. Another example of a pump after ticker change. BMTX merged on January 6th, right here, and they dumped a lot. They dumped 11%. That wasn't great. They did pull it back up, but again, I like getting great value on my plays. I don't want to hold through an 11% dump. I want to get on the ground floor. Okay, HIMS went through a ticker change today. Really bad. They're down 5%. They're down a lot over the last couple of days. I really don't like it. FSR was an example of one that did pump. They ticker changed on the 30th of October, right here, and they just ran massively. They ran over 100%. That was really good. And then SPCE. This one merged a while back in 2019, on the 28th of October. We can scroll all the way back to 2019, October 28th, right here. This is another example of a dump after the ticker change. They were down 11%. Okay, so this is just an example of why you don't hold through ticker changes. Well, if you are going long term, I would obviously suggest holding through a ticker change if you have faith in the company. But if you're trading a company and you hear people say, "Oh, ticker change is going to cause like a 20% increase, a 100% increase," it's not true. Most of the time, I would say 80% of the time, it's not true. You're taking a big risk holding through a ticker change, and it's just not worth it, in my opinion. There's a lot of other plays you can do out there that I would look at. But yeah, so that's all I have for today. I hope you guys enjoyed. Yeah.